Every investor says they're waiting for the right time. What if waiting is the most expensive decision you'll ever make?
Every month, you lose on your rent, your equity, and experience.
One, two, three, four.
Welcome to the Bold Property Podcast, where informed decisions shape stronger property portfolios. Your hosts are Karl from the Barnard Group and Cameron from The Way to Invest. Each week, they cut through the noise and guide you to invest with clarity, strategy, and confidence.
Some of the common excuses I hear when it comes to property investing, right, is especially speaking to newer property investors, is they're waiting for something to happen, right? They don't want to jump in. They don't want to be the first people to sort of invest. They want to wait for rates to drop. They feel like in life they're not ready. Life's too busy. I just hear a ton of excuses. And I think a lot of people are waiting and they're regretting that. I mean, what have you been finding? What have you been hearing?
Yeah, I'm the same. I totally feel like excuses is the biggest thing that's killing people. I'm always telling people all the time that procrastination is the most expensive thing at the moment. You've got house prices going up in certain parts of Australia that are going up like $8,000 a month. But if you're already in the market and you're making that $8,000 a month in equity, well, you're on the right track. So I'm always telling people the best time to get in was yesterday, and the next best time is now.
And the next best time was a decade ago, right? So
Yeah.
it's such a funny thing, right? Because I moved to Australia, what was it, in 2012? And, there's a new market, trying to wrap my head around it. And the first thing people were telling me was, hey, bubble's going to burst, prices are going to come down, just bide your time. And 12 years later, well, properties have more than doubled in price, and it's never come down. And I think there's a lot of people listening to their mates at the barbecue, having a conversation, and I think they're taking advice from people that aren't always the most experienced. And I hear some of these conversations. I met a lawyer the other day and he goes, oh, such a risky thing. Actually, this was more than a year ago, right? Oh, property is so risky. And he couldn't articulate as to why. And he's like, oh, no, I want to see what happens. Well, mate, you've lost that on tens of thousands of dollars because, the thing is, a lot of people want to time the market as well, right? And it's a bit of a cliche, but it's time in the market, not timing the market. And you need to do your due diligence, but yeah, it's interesting.
That's right. And property isn't a commodity. We're not day trading here. This is something you buy, you hold, and, you watch that growth over a certain period of time. But it is fair. I mean, we're not buying, something small here. We're buying something worth hundreds of thousands of dollars. But I'm sure you've noticed as well, Karl, like we've had prices. I remember at the start of the year that you're buying for that, say you're 400-500s and oh, that's a good buy. But now you can't get anything of like great quality or in great areas at that price point. So it's almost like, now 600,000 is the new 400,000, what it was a few years ago. And it's just that struggle. But the reason behind this is the supply and the demand. So there's so much demand with all these new incentives coming in with the first home buyers grants and, everyone's just wanting to get the best deal in the market and, people need housing, but we've got a shortage. So it's just naturally going to go up and up and up. And, the longer people are waiting to time the market, is the longer they're not going to be able to get into the market.
Yeah, I mean, you're right with the shortage, right? It's when we look at the market fundamentals, we still have record immigration coming into the country. We have a shortage of properties and we cannot build ourselves out of that problem fast enough. It's just the demand keeps on coming, and we've had a couple of interest rate cuts, which has made, getting into property a bit cheaper. And then, with the first home guarantee scheme, all of a sudden it's just, supercharged the market with a lot more buyers, a lot more finance coming into the market. But at the same time, there's a bit of FOMO when it comes to that buyer base. And I mean, we were both out in Ipswich over the weekend and I went through a bunch of properties in that sub $1 million mark. A lot of them are tenanted And some of these leases are longer than 6 months. And as you know, a tenant can stay in that property. They don't have to move just because you're selling it. And first-time buyers are jumping in buying those properties, but there are implications when it comes to a lot of the benefits they get as first-time buyers around stamp duty, etc., where they might find themselves in a bit of hot water because they're really jumping in, trying to beat their neighbours who's now got access to money. They might make some mistakes, but that doesn't stop the market from moving and moving really quickly with all this demand just sort of coming in, especially in that sub-$1 million mark.
Absolutely. And when it comes to like being able to build the houses, there is other factors to it. So why aren't we buying, all these why aren't we building all these houses all at once? Well, we don't have enough people to build it. We don't have enough the supplies coming in. The supplies are going up. Inflation's going back up. Hopefully it stays out and we can look at something, no more rate rises, but these are all factors contributing to why we're not building these houses. But then you've got the other factors as well, is that Australia's great in it's got its regulations and we do things properly, but sometimes they're too tight and things take too long to build. I mean, we're not China and we're building 10 stories in 2 days. We just don't have those capabilities. And the technology, I guess, behind it, we're a bit behind in that aspect, but, they're getting things done. We've got certain places in Australia, like Gold Coast and even parts of Cairns now, where there's no way out. The only way we can go is up. So we need to sort of work out, how do we get this infrastructure in to go up and get it done quickly? And that's going to be a major factor in helping bring down the house prices, because we've got the supply, we'll still have the demand. Michelle Bullock said, RBA, we've got 2 more years of this still going on. Like, how is it going to be for someone to get a deposit in 2 years' time if we're looking at this year-on-year growth of how it's going to be, to get into your first home? What's next that the government's going to give us?
Yeah, and it's interesting, right? I thought when sort of COVID rolled around and people were going to start working from home a lot more, I really thought that was going to be a significant shift in the landscape, not just in terms of how people work, but where they could work from. Because if you think of Australia, right, we've got the land. We have so much land, but the problem is, housing is centered around the big cities for the most part, because that's where people need to work. They need to, travel into an office. There's commute times they need to think about. And I really thought with work from home becoming, much bigger thing, that people would have the opportunity to move further out, make use of some of those potentially ring suburbs around the city, which again, there's a lot of demand, but move to some of the bigger regional areas, so we've got the land to build. But I think to your point, you're right. We can't build it fast enough because we don't have the skills. We don't have the trades. So therefore, we need to bring more people in to do the work. But by bringing more people in to do the work, well, we bring more people in that need housing, right? So it's an interesting concept. But yeah, I think back to sort of, waiting, it's not a problem that is quick and easy to solve.
Yeah.
It's the government's trying to do it, but they've already fallen behind on their commitments. Personally, I always think government projects tend to overrun and they take longer than they need to. So, there's no short-term fix to that. So ultimately, the long-term outlook is still going to be pressure on property prices because the fundamental supply-demand imbalance is still there. And I don't see that changing, for years to come.
I agree. And I think the key takeaway note from this is just get into the market. Don't miss out, but make the right decisions. And when you're buying a property, have the right team behind you. It's a big factor. Like, what? When I was younger, I played some AFL football. Like, I played under 12s. I love telling North Melbourne every week on the telly how to play proper footy. Why aren't you doing this? Why aren't you doing that? It's like when you're at that barbecue, as you mentioned before, and you've got, old mate Joe telling you who's never bought a property, or he's bought one property back in 2020, 2000, and he's giving advice to someone that the market's completely different now. Or if you've got someone that's bought a property, didn't work out, they sold it, they lost money on an investment, and then they're giving advice. Oh, don't do that because I did it and it went wrong and it cost me thousands of dollars. Well, they haven't made the right decision in buying the right property, but it's good to get that team behind you to make sure that you don't do that. And yes, we are both buyer's agents, but we're not just talking about team of buyer's agents. You want to have the right person behind you, as in your mortgage brokers, your accountants, financial advisors. We're all work together to make sure that these right investments are done properly and correctly, and in a timely fashion too. We know the markets around Australia.
Yeah, and look, I think part of this podcast is us sort of sharing what we're seeing on the ground, because this is what we do. Day in, day out, we run the data, we have the conversations, we out on the ground. And, I think another mistake a lot of investors make is they want to invest in their own backyard, where what they can afford in their own backyard isn't necessarily in line with their budget. But there's also that concept of they feel safe because, they live there. Of course, everybody else wants to live there. And I think it comes down to a bit of a mindset thing. And, as you said, having the right team on your side that can give you the confidence to make the right decisions, where, a lot of times investing in your own backyard is the worst thing you could possibly do because the fundamentals don't stack up. Just because you want to live there, it's great for you and your family, doesn't mean it's a great investment location. And if that keeps you out of the market for another year, that can be extremely expensive, right? Because a lot of times people, one of the things we touched on was interest rates. People go, oh, it's extra 0.5%. Well, obviously don't get into a property if you can't afford it, right? That's one of the biggest mistakes you could make, is overstretch yourself. But as opposed to sitting on the sidelines, you could consider other markets where you could comfortably get in, you can afford the property, and you're in there and you get that growth working for you, as opposed to sitting out and then waiting for the right time. Because at the moment, I think you mentioned like some markets are doing $10,000 a month, some even more. Like that opportunity cost is absolutely immense. So I think my advice is really, if you're thinking of getting in, you've got that borrowing capacity, have a chat to a good mortgage broker. If you can do something, I would really put effort into getting into the market as soon as possible. And obviously you need to get into the right market with your budget, but sitting on the sidelines, the market's not going to wait for you, right? That's a big thing I tell my clients. It's the market's not going to wait for you. It's up to you whether you're in there riding that wave or whether you sit out and see it passing you by.
Yeah. And another thing that I always touch in like investing is great, whether it's in shares or anything, but having a great savings is good, but you're also not, the best money I always find is when you're sleeping. However, you want to invest correctly. Like, as you said, touching on your own backyard, right here, right now, it could be great investing in your backyard, but it doesn't mean that there's not better opportunities elsewhere to explore. So that's something, and I think the best way to look at it is trying to find out why you're investing. What is your actual goal? Like, what's your North Star? What is your aiming for? Do you want to have 3 properties, and then you're setting yourself up to retire? Or do you want to, have one property where you're setting yourself up to get enough income so you can go on holidays every year? Or do you want to have, 2 or 3 properties and then you can pay off your house and then you can live comfortably and sell it all off and get mortgage and debt free for the rest of your life? So I think that's a big thing, is to work out what your actual goal is when it comes to investing, to make sure that you're making the right decisions, and start from there and work your way back and reach that goal. And that's another way of implementing the right team, working with your mortgage broker to work with how you can reach your goals, and your accountants and your buyer's agents to make sure that you're making these right decisions and buying in the right areas.
Yeah, and obviously your financial planners as well, because one of the very untapped ways of investing in property is considering a self-managed super fund. Now, obviously, when you work through a self-managed super fund, you need to ensure that you get proper financial advice from a licensed financial planner. But it can be a very, very strong way of moving into the property market even if right now you might not have the funds available, sometimes people sit on massive super balances. The returns might be okay, but when you put that into property and you actually get that leverage, as well as the great tax benefits that an SMSF has when it comes to property investing, that's another way to think about property investing, right? You might not have enough funds in your own pocket to do it privately, but if a couple were to get together, set up a SMSF and invest through that, that's another way of investing in property that could be really smart and can really support you in that long run. So there are different ways of going about it. But again, right, sitting around not doing anything is not going to help you in the long run in the property market.
And we can't give financial advice, so this is
No.
just advice for everyone. But this is just providing opportunities that there is certain ways you can go about it.
Yeah, correct. So, and that forms part back to that team, right? You need a good accountant, you need a good financial planner, you need a good mortgage broker, and if it works for you, you need a good buyer's agent that can help you along this process. So, when we think about, what are some of the big questions people need to ask themselves before they want to jump into property investing, right? I think you touched on goals, which is extremely important. If you don't know where you're going, then, well, how do you make a plan? How do you set goals and actually action that and set milestones? And the one thing when we talk about goals is, again, this is barbecue talk, right? People have a chat, say, look, I want to own 3 properties. I always tell my clients, well, let's break that down into financial goals, right? What are they worth? What's the equity you want? What's the cash flow you want? Because you can go buy 3 underperforming properties for $200,000 in the middle of nowhere. Well, that's very different to buying 3 $1 million properties and having them grow by 10% per annum. So it's a conversation about what are your financial goals, and then how do you turn that into a smart property acquisition plan in order to achieve those goals. Because one of the things I say is, if I can achieve my financial goals through property by buying 1 property, I'd much rather do that than go buy 10 underperforming properties.
Yeah.
So it really comes back to financial goals, and property is just a great vehicle to use that, right? I used an example the other day. I said, look, if potatoes start outperforming the property market, everybody's going to become a potato expert, because it's not that it's the bricks and mortar. It's that vehicle. It's that wealth creation vehicle that is extremely powerful. And that's why property is such a good asset class to consider.
And I'm obviously going to agree. But I think that the thing is that we can talk from experience. So for me, I'm very big on borderless investing. And the reason why that is because I've done it. I know what my North Star is. And I've spoken to many people, when I first talk to clients or potential clients is, what is your goal? I remember I had one guy and he was like, oh, look, I've got 15 properties. And I said, oh, mate, that's well done. And I said, why 15? He goes, oh, I don't know. I just kept buying them. And he goes, but I really need to start thinking about buying somewhere else. And I said, well, what about your land tax? Every state has land tax. It's just every state's got a different threshold. And obviously buying in Victoria, that's a common question. However, your land tax is through the roof. So you're probably actually not making any good value in your goal, or not that he had a goal, but you're not actually getting any good profit out of these properties due to the fact that you've got so many and you're paying so much land tax. So it would be about working with him and his accountants and his brokers about selling down his properties to make it more, affordable for him in the long run, and making sure he's got the right properties in the right areas to actually grow that wealth, to make sure that he's getting that financial goal that he actually wants in the end.
I think you touched on an important point there, right? You talked about selling down properties. Now, I've had some clients come to me where they bought the wrong type of property and it was just not performing. And they sat on that for a decade and the property was just not generating great returns. The cash flow, the yield was decent, but, generally when I talk to clients, I say, generally speaking, residential real estate is for capital growth. commercial real estate is for cash flow. So, when we look at those long-term strategies, and again, it's going to be different for every person. Everyone's, starting point and situation and goals in life are going to be different. But we typically do, we acquire a couple of residential properties, use that capital growth, and then later on roll that into a commercial asset, especially when they start talking about cash flow and actually living, financially free, where commercial real estate just has that income coming in. So it goes back to your goals. So, I've had clients who've bought the wrong type of property. They've sat on it for way too long because they haven't really tracked the performance. They haven't really measured what's happening. They just bought and hoped for the best. And they've sort of come to us and said, look, our portfolio is not performing. What do we do? And we had to unwind some of those, initial purchases that they did to get them back on the right path. And the thing I tell clients is buying property is expensive. It's very expensive to be buying and selling property. So you really want to be clear on when you buy a property, it's bought with your goals in mind and it fits that long-term plan. Because you want to buy and you want that asset to work for you. If you have to keep on selling it and buying again, you're just losing money through stamp duty and fees. And you're just going backwards. So capital gains tax, all of those things. So it's really important to, and I think we were talking about, the market's not going to wait for you, but at the same time, you want to be smart when you get into the market. You want to make the right decision. You want to be confident about that decision because you're going to be spending a lot of money on it, and doing it right can, in some instances, it brings in more than people's annual salaries in terms of capital growth. So, money whilst you sleep, I agree with that.
And so I guess touching back on that point of like procrastination, how much is it actually costing you? And I feel like a common thing I'm hearing all the time is people saying, I've been looking for 6 months. I've been looking for 12 months. And not all the reasons is they're waiting for 12 months. It's because it's not from the lack of trying. They've been putting offers in, they've been going to open homes, they've been, seeing out what the other markets are like, but they just can't get in. Their offers aren't compared to the others. And, they sometimes feel like they rely on the real estate agents to actually help them out. And that's how they're going to get into their property that they're wanting. But, if you're waiting 6 months, you're waiting 12 months, you're looking at around $80,000 difference there. But then you've got that issue of your pre-approvals most likely run out. So then when you go to do that, you have to start again when it comes to getting your pre-approval done through your mortgage broker. So then you're ready again, and that's going to cost you time too. So, getting in when you're ready to go is very important. And again, having that right people behind you to make sure that you do that can save you, tens of thousands of dollars.
Absolutely. And I think there's also an emotional toll that a lot of people underestimate when they get into this process, right? And sometimes that plays out in very interesting ways. Either people give up and they walk away, or they go, this is too much, I'm just going to pause this. Or the third one is they struggle and then all of a sudden they get over it and then they overpay massively on a property. I spoke to a real estate agent the other day, and he said, look, he's been seeing especially a lot of first-time buyers, a lot of first-time investors missing out for about 6 months. They're out there putting in offers, and he said then one just came through and they, in his own words, said they overpaid by $100,000 on like a $700,000 property.
Yeah.
And you just look at that and go, oh, and that's like a dagger to the heart where you go, oh, they lost out on the opportunity cost because of time it took to get into the market, and then the emotional cost where they just massively overpaid. So that investment is going to take a while to catch up to the rest of the market. So it's it can be an interesting game at times, and obviously you and I do this every day. We in control of the emotions. We understand the market. We look at the data, but I think for any investors out there listening is get ready and be prepared to act fast. You need to have your finance ready. And, I think this is another topic of conversation, right? Is what does it take to get ready for the market to invest? We've sort of touched on setting clear and actionable goals. financial goals, pulling that back into some key milestones. You need to understand your market really well. You need to understand the numbers when you go in and make offers, especially at the moment, because the data is lagging the market, and just looking at the data isn't even enough. Just all that money that's available, and you need to be able to be in quick, to act decisively without overpaying. So there's a fair bit there, especially for newer investors and even for seasoned investors. You touched on it. The market's changed. This isn't, before 2020 anymore. It moves fast. I tell clients property it'll pop up on real estate on Thursday. It'll be sold by Monday. That's just how the market works at the moment. And agents aren't even coming back to people saying, hey, you might not be the best offer. You need to adjust that. I would say 80% of the agents I've dealt with recently have not come back to give you a second bite at the cherry. They've got 10, 12 offers on the table, and it's a question of they just present that because they can't deal with the influx of inquiries, and they're off finding their next property that they want to sell. What's your experience been?
Yeah, very similar. And it depends as well. So, got a property presented and they're like open home on Saturday, and offers have to be in by Sunday at 5:00. We know it's going to go to multiple offers. So then by 12:00 on Monday, you're going to have to put your best and final in. And it's like, that part is like for someone that's been looking for months, and we find them that property that's really what they want. We don't want them to overpay, but we also know what the market is. So that brings, I'm finding a lot of buyer's remorse or buyer's anxiety coming in to when we say, oh, we've put the offer in, and then the next conversation happens, Cameron, are we doing the right thing? Should we buy this? Are we overpaying? And I understand the emotions of it, because, you're buying such a big purchase and you're going to be either living in this or having it part of your investment portfolio for years and years to come. And you want to make sure that you've made that right decision. But a decision that you've been trying to make for the last 3 to 6 months has now happened in 2 or 3 days. And it's just a lot to take on board. So I like to give a lot of people confidence that, and I can show them why we've bought this, why we bought this particular investment in this particular area, what is the projection of what is a possibility of happening for this property. I don't know many crystals and I don't know how many balls they've got, but, it'd be good to have one and we could work out exact numbers exactly in, 2035, this is exactly what's going to be. But, markets change all the time, as we've touched on. But yeah, it's just a lot of emotions, which is very understandable.
Yeah. And look, I think the thing I always tell clients is property investing, it's a long-term game. And that's the other thing I see is people try and chase hotspots, in inverted commas, where all of a sudden there's an article on realestate.com.au telling you, hey, this area is really hot, it's doing really well. And then people who are uneducated at times, not always, but it sort of drags a bunch of people in to go, I've got money, I don't know where to spend it. They see the article and they all rush into exactly the same location. And you create this bit of a micro climate where there's a lot of competition. But the reality is, once the news picks it up, you're almost too late. Now, in this market, look, everything keeps on going up, but by the time the news picks it up, it's probably been moving for about a year already, because, they look backwards at historical growth. And I think there's a bit of a caution probably to investors is looking back at historical growth, that it should be one data point in your overall decision. I think the saying is past performance doesn't guarantee future performance. So even though an area's done well, what you really need to be looking at is the fundamentals of that location and what's going to continue to drive growth in that location into the future. And there's a lot of research that goes into that. So although we can't predict the future, we really take time to look at the fundamentals of what should be driving this market, what should continue momentum. I mean, I've seen some markets, especially in regional Queensland, where they've done 20% in the last year. And you
Yeah.
go, holy dooly, okay, that's from $500,000 to $600,000 in a year, and the momentum keeps going. Now, some of those markets are slowing down slightly. Long term, they've been doing about 8-9% per annum over the last decade. Over the last 5 years, regional Queensland, as an example, has started accelerating. But you can't just look at those historical numbers, especially for regional areas. It needs to come back to those fundamentals and what's going to drive demand into a location into the future. And I think that's something a lot of investors overlook. They look at what the media says about where they should invest. They look at historical figures about where they should invest. And sometimes they get into markets that have already gone. And, it doesn't mean those markets won't do well, but there's probably better markets where they can invest their money to get quicker growth initially, but still hold it for that decade to ensure that they ride out those market fluctuations over time.
100%. So I was going to say to you, seeing that we are called the Bold Property Podcast, I think that we should maybe look at having a bold statement of the week. One that I've come up with is that I suppose with our topic that we're talking about today is waiting is the most expensive decision you can make in property.
Yep. I would wholeheartedly agree with that. With the caveat, you need to do it right, but market doesn't wait for you. So if I have one bold takeaway, the only bad time to buy is next year.
Absolutely.
So I think, to wrap things up, we've had a great conversation, right? If we are to wrap it up with a couple of key concepts, is time is your biggest lever. We touched on it. The market doesn't wait for you. You're either in it or out of it. If you're in it, let time do the work. Obviously, when you buy, you want to buy smart with the right fundamentals, looking at future potential. But once you've bought, time can just do its thing, and then you sit back and relax. And that's the one thing I tell my clients I can't help you with, right? Just sitting back, relaxing, letting the market do its work. I think that's a big takeaway from this. It's time is opportunity cost, but it's also your greatest asset if you're in the market.
Great. Absolutely. Well, thanks for today. It's been fun.
Yes.
And I'm very much looking forward to chatting to you next week. Another great topic we're going to have on the Bold Property Podcast. And let's hope you can listen to our future podcasts. And if you want to hit the subscribe button, we would love to have you listen to us week on week.
Yeah, and this is the first one, so we might be a bit rusty, but I'm sure we'll get better. And I think the goal is to create a community of like-minded property investors, and we'd love to take you on the journey, share our thoughts. We might be rough around the edges at times. We're not influencers, but I think we want to share our knowledge, our skills, and if it helps a couple of people, then I think we'd be very happy with that.
100%. Well said.
All right, we'll catch you all next week.
See you soon.
Thanks for tuning in to the Bold Property Podcast. If you found value in today's episode, share it with someone who wants to make smarter moves in the property market. For more insights and support, connect with Karl at the Barnard Group or Cameron at the Way to Invest. Join us next week as we continue to break down the market and help you invest with clarity and confidence.